The heated story of FTX has been heightened by the discovery that Sam Bankman's parents and other key FTX workers purchased lavish properties worth millions with the stolen crypto. Hello viewer, in this video, we'll peep inside lavish properties purchased from stolen crypto by FTX. If you find the content informative, then like, share, and subscribe to Coin Engine. Returning to the news of the year for FTX investors, here is another headline. Fresh viewpoints have arisen after the FTX collapse. It has led to a new twist, a significant real estate deal involving Joseph Bankman and Barbara Fried, Stanford University law professors and SBF's parents. Collapse of FTX. A cryptocurrency exchange known as FTX, or futures exchange, includes safeties that guard against copying and hacking, prevent it from being traded more than once, and track it. FTX was once renowned as a controlled cryptocurrency exchange, concentrating on derivatives and leveraged products. In 2018, MIT alumnus and former trader for global exchange-traded funds at Jane Street Capital's Sam Bankman-Fried established FTX. The company offered various trading products, including leveraged tokens, futures, options, and volatility products. U.S. cryptocurrency investors filed a complaint against the FTX developer and the celebrities who supported it. They claimed they used dishonest tactics to advertise digital currency accounts that paid a dividend called FTX. U.S. securities law forbids mixing customer funds with counterparty funds and trading them without express consent. The FTX platform did not permit trading by U.S. citizens. This was in response to the stringent regulation of the sector. According to the FDIC, FTX US may have made false and incorrect statements violating the FDIC Act and served it with a cease and desist notice. The news of the collapse of one of the biggest cryptocurrency exchanges, FTX, undertook the crypto world by storm, leaving an estimated 1 million debtors, with losses running into the billions of dollars. Report by Reuters. As the legal investigations continue, a report by Reuters revealed that SBF used $10 billion in customer cash in secret to support his trading firm. Around $1 billion of those deposits have disappeared. John Ray, the new CEO of FTX, stated in a court document that he thought corporate monies of the FTX group were utilized to buy lavish homes and assets for workers and advisors. In the past 2 years, at least 19 homes worth close to $121 million have been purchased in the Bahamas by FTX, his parents, and senior officials of the defunct cryptocurrency exchange. According to official property records, they invested $300 million in property in the Bahamas. Attorneys for FTX claimed that Bankman-Fried ran FTX as a personal fiefdom, and that one of the company's units spent millions purchasing houses and holiday properties for its senior staff in the Bahamas. Most of the luxury beachfront houses purchased by FTX and listed in the filings were 7 condominiums in the pricey resort neighborhood of Albany, costing about $72 million. Bankman-Fried's parents, Stanford University law professors Joseph Bankman and Barbara Fried, are listed as signatories on the papers for another beachfront home in Old Fort Bay. This gated neighborhood once housed a British colonial fort constructed in the 1700s to ward off pirates. A spokesman for the professors said that Bankman and Fried had been attempting to return the property to FTX. When asked why the couple decided to purchase a vacation home in the Bahamas and how it was paid for, whether out of pocket, through a mortgage, or by a third party like FTX. Although it is well known that FTX and its employees purchased a property in the Bahamas, where it established its headquarters in September of last year, the recently disclosed property records reveal for the first time the scope of their real estate buying binge and the intended use of some of the properties. SBF claimed that he shared a home with 9 other co-workers. He said that FTX offered complimentary lunches to its staff members and an in-house Uber-like transportation service all over the island. Properties purchased by FTX. In 2021 and 2022, FTX Property Holdings Limited, a division of FTX, acquired 15 properties for close to $100 million. The company's most costly acquisition was the $30 million penthouse at the Albany. In this resort, Tiger Woods annually organizes a golf event. The penthouse was identified as a home for essential people, according to the property documents dated March 17 and signed by Ryan Salome, the president of FTX Property. 3 condos at One Cable Beach, a beachfront home in New Providence, are among other pricey real estate transactions. According to records, Nishad Singh, the former head of engineering at FTX, Gary Wang, and FTX co-founder, and Bankman-Fried purchased the condominiums for domestic use at the cost of between $950,000 and $2 million. 2 real estate holdings by FTX were designated for commercial use. An $8.55 million group of homes that functioned as the company's headquarters, and a 4.95-acre coastal parcel intended to be transformed into office space for the cryptocurrency exchange. Currently, the FTX headquarters are vacant, with the furniture pushed up against some windows. The $4.5 million piece of property is also vacant. Its signs have been taken down. So that was done with the stolen crypto by FTX. Honestly, we can't be made any more speechless by the SBF. Thanks, Reuters. What have you got to say now? Use the comments section to express your views. And until the following video, subscribe and keep watching Coin Engine.